This is your Saturday pre-market brief for July 5th. Everything here is for education and entertainment only, not financial advice, so do your own homework before making any moves. Let's get into a market that's quietly setting up some big themes. Here are the key themes driving price action heading into the holiday-shortened week. Fed rate hike expectations are fading fast, with futures markets now pricing only about a 20% chance of another increase after June's surprisingly soft jobs data took the hawks' case apart. That weak June jobs report, just 57,000 non-farm payrolls, is still echoing through every asset class, reinforcing the view that the labor market is cooling enough to keep the Fed on the sidelines. The Dow closed at record-flirting levels in the prior session, pressing all-time highs even as the broader tech trade wobbles and rotation into blue-chip value names accelerates. Oil has pulled back to pre-war levels, relieving one of the biggest inflationary pressures that had kept the fence finger hovering over the rate hike trigger for months. The 10-year Treasury yield has slipped back below 4.5%, easing borrowing costs across the economy and giving equity valuations some much-needed breathing room. Continuing with our key themes, a few more dynamics worth watching as we head into next week. With a light data calendar and the holiday behind us, expect a technically driven tape where individual headlines and chart levels matter more than macro catalysts. Here's what's on the calendar that could move markets in the days ahead. The ISM Services PMI for June drops and will tell us whether the dominant services side of the economy is holding up or starting to crack under the weight of higher rates. Wednesday's release of the FOMC June meeting minutes becomes the marquee event of the week. Traders will be parsing every line to see how seriously the committee actually debated hiking before that soft jobs print changed the calculus. Weekly initial jobless claims will be watched closely for any confirmation that the labor market softness we saw in the June payrolls number is a trend, not a one-off. A handful of early reporters give us a first look at how corporate America is holding up. Here's who's on deck. PepsiCo reports Q2 results and will offer a critical read on consumer staples demand, pricing power, and whether shoppers are finally pushing back on years of price increases. Levi Strauss posts quarterly numbers, giving us a window into discretionary apparel spending and whether the mid-market consumer is still willing to open the wallet. Delta Airlines reports Q2, and this one is a big tell on travel demand durability, whether the post-pandemic travel boom still has legs or is finally normalizing. Here's my read on the week ahead. With the 4th of July in the rear view, this is a data-light stretch, which means Wednesday's FOMC minutes are the undisputed main event, as traders dig into how close the committee actually came to hiking before that anemic 57K jobs print yanked those odds down to roughly 1 in 5. Falling oil prices and the 10-year yield dipping back under 4.5% have taken pressure off equities, helping the Dow push toward record territory, even while tech stumbles. And early earnings from PepsiCo, Levi's, and Delta will give us a valuable first look at consumer health and travel demand before the big banks kick off reporting season the following week, which historically sets the tone for the broader market. That is your pre-market brief. Remember, nothing you heard here is financial advice. Always do your own research and consult a professional before making investment decisions. If you found this useful, smash that subscribe button and turn on notifications so you never miss a morning update.